Welcome back to the deliberations of the Citizens Monetary Policy Committee of CNBC-TV18. I've been speaking with the chairman of our MPC, Dr. Pronab Sen, and members Soumyo, Kanti, Ghosh, Samiran Chakrabarty, Sonal, Varma, and Sajjid Chinoy. Gentlemen, and Sonal, thank you for your patience. Well, Samiran, I want to come to the liquidity question. But before that, we haven't discussed inflation enough. There is a crude element. Does it change the calculation a lot? As well, monsoons here, there, not there, reservoir levels. Just tell us if the inflation number of 5.4 and the trajectory will undergo some change.
So, this is one area where there is good news and there is bad news. So, the good news is that the vegetable prices have corrected maybe much faster than any one of us would have anticipated. The good news also is that core inflation momentum is running pretty low right now. But the bad news is that, one, as you mentioned, crude has gone up, although it might not have an immediate impact on the inflation numbers because the retail prices of petrol, diesel have been kept constant. But if you look at the food basket, there are other areas like pulses, rice, and I fear about the impact of global El Nino on edible oil prices, palm oil, etc. These are still concerned. I mean, pulses are still growing even for the month of September. Rice is also leading. So in some sense, this will not let the MPC relax on inflation. Our sense is that while the September print will be probably 5.3 kind of a number, but as we move to the back end of the year, December, it can again cross 6%, and then in the Jan-March quarter come down to 5.2%. So RBI will not be in a terrible hurry to revise that 5.4 number, but there could be some marginal changes to that as well.
Upside risk.
There is an upside risk on that as well. The critical thing would be that RBI will now be forecasting for end FY25. Now, where that number comes out to be, would they be comfortable giving a number closer to 4, or would that remain still pretty elusive in the forecasting horizon? I think that will determine the whole real policy rate discussion, and to that extent, the expectation about the first rate cut will have to be adjusted as well.
Oh, yeah. You're right. This is September policy. Mid-year policy, you also get their MPR, the Monetary Policy Report, which will give us many more forecasts of how RBI is looking at FY25. And a couple of the forecasts will come into the statement itself. But now for the big liquidity question, because in the past two policies, the Reserve Bank has made it very clear that they won't tinker with rates, but they are going after inflation through the liquidity channel. So, Sajjid, what is your sense? Liquidity takes a front seat, takes the center stage. Do you expect RBI to continue to keep liquidity tight? That is, keep the call rate closer to 6.75 than 6.5?
I think given what's happened, given the inflation risks that have arisen from monsoon and crude, I think the RBI will want to prefer a status quo in ensuring that overnight call rates, remain where they are and don't come down very much. Liquidity management is going to be a little bit tricky because in the next couple of months, there will be occasions in which headline liquidity will go into a surplus in early October and early November. So the task before the RBI is to ensure that, liquidity doesn't do that, and you sterilize enough in different mechanisms temporarily so that the weighted average call rates remain where they are today. This is something that, in fact, all Asian central banks are doing in different ways against the backdrop of a stronger US dollar.
Sonal, how worried are you about liquidity, or rather, how much do you think RBI will worry? Is there any CRR hike-like instrument that we should put on the table?
I think there are various options, obviously, Latha, on the table, some harsh, some not so harsh. I think clearly, as Sajjid was mentioning, the risk to inflation from the supply side factors are still there. And in that scenario, RBI would want liquidity to not go into a big surplus. But at the same time, they would not want it to be too tight because they do want credit for the productive sectors to basically continue going forward. And I think there's uncertainty on how the dollar inflows will be and therefore whether it will be a source of liquidity or actually could be another tool to drain liquidity going forward. So we don't know how that goes, but we do know that there's going to be more currency leakage because of different factors, festive season, elections, etc. So I think in that scenario, it would probably be best for the RBI to not use very harsh tools at this stage. So if there is an opportunity to sell dollar and absorb liquidity or even do OMO sales as necessary, or of course the VRRR option could be used. A harsh measure like a CRR is obviously an option which probably will get discussed. But in terms of actual implementation, I think right now one thing, as Samiran was mentioning, core momentum has surprised on the downside. So the supply side inflation risks at this stage are not materializing. So I think keeping liquidity just a bit in surplus, so keeping the call rates in the 6.5, 675 zone and managing liquidity through some of the non-harsh measures would probably be the right approach at this stage.
Okay, fair point. Yeah, the liquidity stance can be expressed through the call rate. Soumyo, very quickly, what should we watch out for in the policy? Some wording, some phrase. What will you all ears be?
See, Latha, I think in terms of the policy wording, I think it will remain like it is, because it will say that the Reserve Bank will continue to be watchful, and given the fact that inflation, even though is going to trend down, we need to understand that headline inflation is unlikely to come below 5% throughout the rest of the current fiscal, and possibly it could reach a peak in December. So even if you look at the inflation trajectory, yes, within the RBI band, but not below 5%. So from that point of view, the RBI will continue to be watchful. The food inflation possibly may not flare up again, given the fact that it has corrected too much, and the fact that the core inflation, which some time back was looking the most sticky part, is now looking the more flexible part of the downward trajectory. That will make the RBI comfortable.
Yeah, actually, core inflation has fallen everywhere. It's not just to our credit. Looks like China is a big disinflationary force, and that's helping everyone. But Dr. Sen, last word from you. What should be the message that RBI should give in its stance and in its wording around the stance?
Well, in terms of its wording, since you brought up the issue of liquidity, I think the RBI needs to worry a little bit about the feeling that I think a lot of people have, that liquidity already is in deficit. And I don't think they should continue to nurture that impression and make it worse. But as I said, you have to bear in mind the demands that are going to be placed on them prior to the elections.
Okay.
And if RBI thinks it's entirely independent in terms of what decisions it takes, it isn't. So you're going to have a game plan that is under evolution at the moment, and the RBI needs to keep, whatever instruments it has on hold for the moment, waiting for it to happen. But this is, given what has been happening at the moment, I wouldn't tinker around with the liquidity very much at this stage.
Okay, that's an important point of view, sir, because liquidity, as even Sonal pointed out, could go out on its own ahead of Diwali or during Diwali, normal time when Indians pull out liquidity from the banks. Okay, you said on hold. That gives me the clue to ask you to vote. So first, shall we start with the first voting question? What do you think Reserve Bank will do to rates? Start with Sajjid.
It will be a hold, a pause.
Hold. Okay, Sonal?
A hold.
Okay. Soumyo, yours?
It will be a hold.
Samiran?
Same, hold.
Chairman?
Hold.
Hold. Okay. This is a unanimous vote. And the next question, I'm suspecting, is not going to be all that unanimous. The stance currently at withdrawal of accommodation, will they change? If yes, to what? Sajjid?
I think they'll retain the stance, withdrawal of accommodation.
Okay. Sonal?
Retain stance.
Okay. Soumyo?
Retain the stance.
Samiran?
Retain the stance.
Okay. Dr. Sen, your members say retain.
They're unanimous, but I tend to disagree. I think that may send just the wrong message.
Okay.
They should actually move to neutral and
Okay.
give the impression that they are ready to move in either direction.
Okay. I mean, that would be very big if they did. And that would also perhaps put the government on notice in case something fiscally ugly comes. But let us see what the Reserve Bank and the Reserve Bank's MPC does. Thank you very much, members of the Citizens MPC.